Hello viewers, I am Sandeep. Welcome to Krishna Study Plan. In today's video, we are going to go through the final accounts, which is very important topic in our inter first year. And it almost the weightage of the final accounts in our final exam is 20 marks. So let's briefly go through what is final accounts. So basically, final accounts is mainly useful to find the financial position and of a particular business. In exam, examiner not only test the calculative part, but also they try to test you in finding the way that you are, thinking the final accounts of the business, like how you are arriving the gross profit, net profit, and what is the financial position based on the balance sheet. Now, basically, in final accounts, we it is categorized into three parts. One is trading account, one is profit and loss account, and one is balance sheet. So basically, in trading account, all the factory related expenses or incomes are posted in this trading account. And profit and loss account, in profit and loss account, basically all the administrative or office related expenses or incomes are posted in this profit and loss account. Balance sheet is nothing but a statement, that is nothing but a statement where all the assets and liabilities of the business are been entered, and it is the main document that helps a accountant or a business owner to identify the financial position. In general words, the position in where they stand according to their business. This is nothing but balance sheet. So as you know, this contains 20 marks, and basically the three things that plays a key role in this sum is like classifications, how you are classifying the expenses. So for suppose there are two terms called wages, salaries. So wages we give to the labors. So when we get wages, then we will post it to trading account. Salaries we give to our employees or contractors, and that comes to office expense, and that is posted in profit and loss accounts. So in this way, how we are classifying the entries is what tested. And next, adjustments we will go much deeper in when we are doing the sums, but just an overview. Adjustments is nothing but the changes that happens to the current current item. For suppose we have salaries, but we may have some outstanding salaries. So if we have outstanding salaries, then we are going to add it to salaries. So in that way, outstanding items or depreciations or appreciations to assets. So these kind of things, how we are adjusting. So classification, adjustments, and presentation, how you are presenting your sum. And mainly in presenting, we mean the proforma which we are going to prepare, and putting debit and credit on the top of the proforma. For trading account and profit and loss, we do not keep debit or credit to balance sheet, because that doesn't show debit or credit balance. That's purely assets and liabilities, and it's a statement, it's not the account. So that's these basic things are nothing but presentation, like the proforma, putting debit and crediting, writing the business name, and so on and so forth. This is nothing but comes under presentation. Classification, to which are we posting the entry, are we posting the item to the correct account, are we adjusting correctly, are we presenting it pleasantly. So these things carry uh, weightage, and these are going to be a main key role for the final account sums. Hi everyone, please don't mind my handwriting. It's bit worst, but it's okay, understandable. So this is the pro forma of final accounts. So in final accounts, we have trading account. So like in this whole pro forma, we have two accounts. One is trading. First half is trading account, and second half is profit and loss account. And the third, this this pro forma is balance sheet. So let's go in deep in this pro forma. So in this pro forma, the main things that you need to remember is we put particulars amount, and also try to mention rupees symbol in brackets, so it uh, gives it shows the good presentation. And always do not forget to keep dr and cr on the top, debit and credit. We'll have debit and credit for trading and profit and loss account, but not balance sheet. Again, I'm telling you, this is a statement, this is not an account. So that's the reason why we do not put debit or credit on the top. So debit and credit must and should, particulars amount and particulars amount. And for profit and loss account, we consider these as particular amount, particulars amount. We do not write here, but first half is trading and second half is profit and loss. If you want, you can mention at the end of the trading account, you can put P&L account in the middle. Even if you don't mention, that's fine. But second half is considered as P&L. So how the final accounts, like amounts flow. So in the trading account, we give all debit aspects and credit aspects. At the end, if the credit balance is more, then we'll get a gross profit. If the debit balance is more, we get gross loss carried down. C oblique D is nothing but carried down. Shortcut for carry down. B oblique D is brought down. So at the end of the account, we put it carried down amounts. Either it may be gross profit or gross loss, carried down, carried down. If we get gross loss, then that gross loss will come to P&L account debit side. Gross loss brought down. Here it is carried down, here it is brought down. Okay. And next, if we get gross profit carried down in trading account, it would be gross profit brought down for P&L account credit. If we get balance here, it comes here. If we get balance here, it comes here. Profit comes in the credit side of P&L, loss comes to the credit debit side of P&L. And balancing figure. So in the same way, in P&L account, if we get if the credit items are more, then that would be a net profit. If the debit items are more, and that would be a net loss. Okay, it would be net profit or net loss for P&L account. And if it is net profit, then it will add up the capital, it will increase the capital. If it is net loss, it will decrease the capital of the proprietor. So this is how the flow is. And the main important point to be remembered, whatever the items that we put in the debit side of trading or P&L account, it should start with 2, 2, 2. 2 wages. Okay, 2 factory rent. It should be 2 salaries in P&L account. It should be 2 interest, 2 rent. It should be 2, 2, 2 always on the debit side. On the credit side, it should be buy gross loss, buy sales, minus buy sales returns, buy closing stock. It should be buy always on the right side. This debit and credit, these twos and buys will also carry some marks. So this is nothing but the presentation. The presentation that we talked before, this is nothing but presentation. And the point to be remembered, debit and credits will not be on the top of balance sheet. Tools and buys will not be in the liabilities and assets. If there is an asset, we'll direct write machinery, furniture, something like that. But we don't put any buys here. We don't put any tools. To capital, we will not put to capital. Okay. And carried down, brought down. Remember, carried down, brought down. And this is pretty much that you need to remember as part of Proforma. And if you follow these things, I think you are good with this Proforma. And next we can start with our sums. I am not going to teach the flow of final accounts or Proforma in every problem. This would be the one last time. That's it. First and last time. Okay. Chalo. Let's go to sums now.